With this session update, I'm Shannon Lurkey. A bill that would exempt Minnesota businesses from owing state taxes on the forgivable loans they received through the federal Paycheck Protection Program came before the Senate Tax Committee. Here are some highlights.
Back in March, the federal government passed the first round of a provision called the Paycheck Protection Program, where businesses, certain businesses, not all businesses, but businesses with under 500 employees could get a loan from the federal government through the Paycheck Protection Program, that if they maintained their employment of their employees, 60% of the loan would have to be spent on salaries, no less than 60% on salaries and benefits. The balance could be spent on things like your mortgage, other business expenses. But if you maintained your employees over the period of time, then the loan could be forgiven, or portions of it forgiven. There were about 102,000 of these loans in Minnesota, totaling about $11.3 billion. And businesses were told when they took these loans out that they wouldn't have to pay taxes on these loans if they were forgiven. The federal law was very clear on that. So if they ended up being converted to a grant, businesses wouldn't have any tax liability on these forgivable loans. What I think most businesses did not know is under current Minnesota law, these forgivable loans were considered as taxable income in Minnesota. So when they got around to filing their 2020 income taxes, which is coming up this month, they're going to have to pay Minnesota income tax on these forgiven federal loans. So what the bill does is treats the loans like the federal government does. It says that these forgiven loans are not going to be taxed at the federal level or at the state level as income. The other thing that the bill, that's the first provision. The other provision is it allows businesses with this forgiven loan money, essentially grant money, to be able to take deductions for the allowable expenses that they incurred that were paid for with the loans. The third provision in the bill is one that dates back a little further, actually. Back in 2017, when the most recent federal tax bill was passed, some states really benefited a lot by that, other states not so much. And the big factor was whether you benefited or not was the cap that was put on state and local taxes of $10,000. In a state like Minnesota and maybe New York and California, states that have a relatively high income tax, those caps meant that at some point in your income, it was going to be very difficult to itemize because they weren't no longer itemized expenses. So the challenge that prevented for S corporations, businesses that were not C corps but S corps, so they take their income flows through to their personal tax liability, is you could, let me use an example, it might be easier for people to understand than to me walk through it. If you were somebody who owned a bank and you were not a C corporation, but you were an S corp, you could only deduct on your income tax a cap of $10,000 for things like your property taxes, even though your property taxes might be 10 times of that, and certainly seem to be a legitimate business expense, were a legitimate business expense before the new federal law passed. So what this does is it allows those S corporations, and there are a lot of them, I want to say 170,000 or so, there's a large number of S corps that now will be given the opportunity, if they choose to file as a C corporation. So their tax rate will actually be a little bit higher than, well, I guess probably depending on their income, but for most of them, their tax rate will be a little higher as a C corp than it is an S corp, but they'd have a different set of deductions, be able to take some more of those business deductions, especially relative to property taxes, when they calculate their tax liability. So it's a pretty important change. It doesn't allow for businesses to be able to do it on a year-by-year basis. It says that if you're going to do that, you have to do it for a minimum of 4 years. At least 50% of the owners in the S corp must take it, so the majority of the company. and then everybody in the company has to file that way. So, Madam Chair, it's a little down in the weeds as it relates to tax policy for most people to follow, but for people that are in this universe of being S corps who were negatively impacted with their business expenses, it's a pretty important provision. So those are the three pieces. Those are the three pieces of the bill, Madam Chair. And the total cost when we put in the 179 expensing clarification is about $441 million. Largely one time. There's a little bit of tails in it, but it's about $441 million in the upcoming biennium.
I don't want to lose sight of the fact that this is one-time money. And as we saw in our budget forecast, that's a lot of where we will be focused is one-time. You always want to use one-time money for one-time things. And that's exactly what Senate File 263 does.
Looking at another aspect of the impact on Minnesotans from the CARES Act, and part of that was something called the FPUC, and it is one section of the CARES Act that was passed and signed by President Trump on March 27th, and it allowed $600 additional unemployment compensation for 17 weeks to be sent out, to be administered by the states and sent out to those who qualified for it. And part of the qualification was the impact of COVID-19 in the explanation to workers that came out from the Department of Revenue. What it allows is, because when they were sending out the deed was sending out the checks, and hundreds of thousands of people who were out of work, it was really thought to be the most important thing was to get that $600 into the hands of affected workers, and in addition, afterwards, the $300. But as they explained it, to develop and test and implement a new system, the new system functionality to allow for tax withholding would have significantly delayed the payments. So they just sent them out. But that means that at most, workers who during that period received $10,220 of income that ordinarily, as unemployment insurance, just as loans, by the way, forgiveness of loans are usually taxed, they did not have their tax withholding. So the same kind of equity considerations for these individual workers is what prompted this amendment.
Senate Tax Committee, in a very bipartisan way, is very focused on helping Minnesotans and their employers recover quicker from this pandemic and the economic downfall that has come with that. And that is the spirit of the bill that you see before us today, Senator Bakk's Bill 263. The amendments that have been added, particularly the A8 amendment. Normally, members, I would be a bit reluctant to add an amendment that is not quite finely tuned before we send it to the Senate floor. But time is of the essence here. And while there's a tad bit more work I think we will be doing on this A8 amendment, make sure that the funding actually gets to those who need it the most. I do support it today. We are in an unusual time. We need to get this bill moving. And so I will be supporting the A8 amendment, knowing that we'll be doing just a little bit more clarity, also to make sure that we have more clarity on that revenue estimate as well. And
we have colleagues over in the House. All of us have two of them. And I think bipartisanly, there's an understanding for some urgency with this in the Senate. But because the Constitution requires that bills that impact state revenue have to originate in the House. Bad as the Senate might want to do this, we cannot get it on the governor's desk without the support of the State House. So to members on the committee and members of the Senate who might be watching, and frankly, the public who might be watching, please reach out to your members of the State House of Representatives, ask them to act in a similar way to what the Senate has and get a bill on the House floor for a vote, send it over to the Senate, and we'll work out our differences between the House and the Senate. And I really, really would like to get this on the governor's desk before the 15th of March. But unfortunately, Madam Chair, this committee can't do it on its own. We're going to need some help from across the street over at the state office buildings.
To continue following these issues and more, watch legislative coverage Monday through Friday on the PBS Minnesota channel or visit our website, www.senate.mn/media.